and thank you for your interest in SBI Insurance Group. I'm Claire, and in this presentation, I will provide a brief overview of our company, recent financial performance, growth outlook, and shareholder return policy for the fiscal year ended March 2026. Before we begin, I would like to note that this presentation is provided for informational purposes only, to support understanding of SBI Insurance Group's business performance and strategic direction, and is not intended as investment advice or a solicitation of investment. First, let me briefly introduce several key characteristics of our business. SBI Insurance Group is the insurance holding company within the SBI Group, one of Japan's leading online financial groups. We operate across three core segments: non-life insurance, and small amount and short-term insurance. A key characteristic of our business is our digital-first operating model. We primarily distribute insurance products through online channels, enabling competitive pricing, operational efficiency, and convenient 24-hour customer access. This structure allows us to build an efficient and scalable digital insurance platform. Now, let me move to our financial highlights. For the fiscal year ended March 2026, SBI Insurance Group achieved record highs in all key financial indicators, including ordinary income, ordinary profit, and profit attributable to owners of the parent. Ordinary income increased 18.5% year-on-year to 140.3 billion yen. Ordinary profit rose 39% to 13.1 billion yen. Profit attributable to owners of the parent increased 44.8% to 2.88 billion yen. We believe these results reflect both strong revenue growth and the benefits of a scalable operating structure. Looking briefly at segment performance, all three business segments recorded revenue and profit growth during the fiscal year. The life insurance segment continued to expand steadily and accounted for 41.1% of consolidated ordinary income. In terms of profit contribution, the non-life insurance segment remained the largest contributor, accounting for 55.3% of total segment profit. Overall, we believe these results reflect the scalability and efficiency of our digital operating platform. Next, I would like to briefly explain our supplementary disclosure regarding IFRS-based profit figures. SBI Insurance Group currently reports its financial results under Japanese GAAP, while our parent company, SBI Holdings, prepares its consolidated financial statements under IFRS. Because accounting treatment differs between Japanese GAAP and IFRS, particularly in areas such as insurance, contract liabilities, profit levels under IFRS for growing insurance businesses, such as ours, generally tend to be higher than those reported under Japanese GAAP. The table above shows pre-tax profit attributable to our group included in the IFRS-based consolidated results of our parent company, SBI Holdings. The table below shows pre-tax profit under Japanese GAAP. For the fiscal year ended March 2026, pre-tax profit was 4.3 billion yen under Japanese GAAP, compared with 11.9 billion yen under IFRS. In other words, profit under IFRS was measured at approximately 2.8 times the level reported under Japanese GAAP. This illustrates how profit levels for growing insurance businesses such as ours can appear significantly higher under IFRS accounting standards. We believe these supplementary disclosures provide investors with additional perspective on the earnings profile and growth characteristics of our business. Finally, we have started preparations for the voluntary adoption of IFRS and currently plan to begin IFRS-based consolidated financial disclosure from the first quarter of the fiscal year ending March 2030. We believe this transition will further enhance the international comparability of our financial reporting for global investors. Next, let me discuss our outlook for the next fiscal year. For the fiscal year ending March 2027, we forecast continued growth in revenue, profit, and dividends, with all expected to reach new record highs. We project ordinary income of 150 billion yen, ordinary profit of 16 billion yen, and profit attributable to owners of the parent of 3.62 billion yen. This would represent profit growth of 25.7% year-on-year. Our growth outlook is supported by continued growth in policies in force. We are also making solid progress toward the targets set in our medium-term management plan. Under our 5-year plan ending in fiscal year March 2028, we aim to achieve 4 billion yen in profit attributable to owners of the parent. Based on our current earnings trend and the forecast announced this year, we believe we are progressing steadily toward this target. Our focus remains on sustainable earnings growth, operational efficiency, and long-term corporate value creation. Regarding shareholder returns, our policy is to increase dividends in line with earnings growth while maintaining a dividend payout ratio of approximately 40%. For fiscal year March 2027, we forecast an annual dividend of 59 yen per share, representing an increase of 26.9% year-on-year. We believe this policy is aligned with long-term shareholder value creation. In closing, SBI Insurance Group continues to strengthen its position as a digital insurance platform supported by efficient online operations and scalable growth potential. We remain committed to long-term value creation for shareholders. Thank you for your attention.